Hey, all you MSDers. Welcome to another long-form episode here on the podcast. Welcoming back Jamie Holman. He is portfolio manager over at Mercur Investments, which includes the ASA Precious Metal Fund. I asked Jamie to come on and kind of do a debrief after the BMO conference as we get a short break between BMO and into PDAC. A couple big deals he gives some of his thoughts on, including some big silver stream deals that have hit the tape here in the last couple of weeks. Then we also talk about what's happening in the royalty market in general, and then the sweet spot here in M&A. So great conversation with Jamie. Appreciate his time as always. He doesn't do it very often. Special thank you to Integra Resources, Visa Silver, Equinox Gold, and Revival Gold for their continued support of Mining Stock Daily. Safe travels to everybody out there on their way to Toronto. We'll see you there on the floor of the Investors Exchange. Be sure to tap the shoulder and say hello if you see me floating around. All right, everybody, let's get into my conversation with Jamie Holman. All right, everybody, welcome back into Mining Stock Daily. We're going to have a long-form conversation with he's been on the podcast before, but not very frequently. Jamie Holman is a portfolio manager over at Mercur Investments, and he also manages the ASA Precious Metals Fund within Mercur as well. We've had Jamie on before. This was probably a year or two ago, but I asked Jamie to come back on. Listen, all things moving in this sector. It's been a wild ride, mostly through 2025 into 26 with a little bit of volatile correction. Jamie, you're visiting us today here from the BMO conference down in Florida before everybody heads up to freeze their butts off in Toronto. So enjoy the sunshine before things get miserable.
Yeah, no, it's been great. Yeah, no, it's the BMO conference always happens before PDAC, and it's it's one of the largest institutional mining conferences that happens every year. It's probably the best, large scale institutional mining conference that happens globally. And I have actually come to this conference for 14 straight years, so
Wow.
So it's been interesting to see it through all the iterations and the evolution of it. But the one thing is that I think BMO's been very smart is they have stayed supportive of the industry through, the bear market and the depths of, what us long-term investors in this sector have gone through. And I'm sure they are reaping the benefits now.
Yeah, well, it took a little while for I think
Yeah.
most of us are
Yeah.
reaping the benefits, aren't we? I mean, we should be.
Yep.
It's
Yeah.
we said it a couple times, and I've said it through conversation, also on the podcast and through some presentations, Jamie. But it's a danger. It almost seems a little dangerous when everybody's making money in this sector.
Yeah, no, I agree. Well, I mean, it's just to give you the context here, so I've been here through thick and thin, and this is by far the most excited and enthusiastic I've ever seen this conference, maybe that is a harbinger of a quote unquote top, but I mean, that also could be the fact that we have a recency bias of being through such a awful bear market that's really lasted since in the commodity sector since like 2010, 2012, right?
Right.
And so down here, I mean, the investor participation was up 18%. I think it would have been up a lot more than that, but they pretty much sold out everything. And what's there's certainly more generalist investors that are coming to the conference. And it was interesting too, because I was up in Toronto. I was up in Toronto, and it happened to coincide with when a tech conference was up there as well. And so I was talking to some of the tech investors, and what I hadn't really appreciated from being so ensconced within the commodity sector is that these tech investors are really perplexed about where to invest and how that industry has changed so drastically. And I think that we have seen this rotation in the market that is going back to real world assets. And There was I don't know if you remember, it was probably back in 2011, but Mark Andreessen of Andreessen Horowitz, he had this famous statement that software was eating the world. And he argued that every traditional industry from retail to defense was fundamentally transformed into a software business, and the digital infrastructure and global scale was finally mature enough to make that happen.
Yeah.
And now all those industries, all the SaaS industries, all those software industries are now being disrupted by AI. And uh, and we've seen the massive capex rollout by all these tech companies, and then we've seen quite an explosion of in drawdowns on some of the other software companies. And I think investors are like, well, where do we deploy capital now? We have, a huge amount of money that's going into AI, and essentially all the largest companies in the world have taken all their free cash flow and sunk it into AI,
Yeah.
in the infrastructure, and then in the back, and we don't know what the returns are from that. And then we're seeing a lot of these other industries are being cannibalized by that. And I think a lot of people are going down to, okay, well, what are what's the picks and axes and, the infrastructure behind this? And so they've gone to chips. And now that has, gone down to mining. It's gone down to the energy infrastructure. And I think we're seeing a big rotation back into the real assets. And the area that it's most salient is in the market itself, where you see like, the SaaS company index is down like 26% in the last 6 months. And you see the, energy infrastructure index is up 20%. And we've seen the materials index up, significantly. So, yeah, I think that there's a big rotation going on. And I think, the person that spoke about this quite saliently for a while has been, oh, I'm blanking on his name, Jeff Curry,
Yeah.
the old Goldman Sachs analyst. And he had a great expression of calling it the revenge of the old economy. Um, and I think that that is what we're seeing, is that, that the new economy ate our lunch in in the traditional industries for so long by dragging all the capital out of the sector. It starved it for so long that, we do have large deficits in a lot of these commodities, and it's going to take years to build that back up. And we're finally seeing the capital rotation come back into our industry. And so it's interesting to watch happen. That's a long way of saying that I actually, even though it is very exciting down here, I think that the structural deficit that we're in within the economy and some of these, big shifts that are going on within the economy are not an overnight flash in the pan.
Yeah, absolutely. I was at a macro conference. It was a 1.5-day conference in Nashville. I've been to, I dabble in macro, right? But by no
Everybody
means am I.
does.
Yeah, I know. Well, you have
Yeah.
to be,
Yeah.
and I
Yeah.
actually, I will give
Yeah.
the crypto people and the Bitcoiners a ton of credit, because no group has been more effective in communicating the dangers of fiat currency and fiat systems
Yes.
better than the
Yeah.
Bitcoiners have done in the
I
last 10
totally agree
years.
with you on that.
Yeah.
Yeah. Yeah.
But when Bitcoin doesn't go to the moon and nobody's diamond handing anything and is trading at $65,000 a coin and looks like it could fall through the floor at any moment, you're seeing a lot more of those crypto people start talking about hard assets like gold and silver and metals. And it's just starting.
I would agree with you on that for sure.
Yeah.
Yeah.
And so I'm at this macro conference in Nashville last week, hosted by Tony Greer. And, there's stand up people, like good guys I know and have a ton of respect for. And it's the major theme of the conversation, the macro conversation. It all came back to precious metals and gold and a little bit of gold miners. And that was the macro trade. A couple years ago, the macro trade was, buying twos and selling late in the curve, or something like would be a
Yeah.
macro trade, that was like
A
I don't
curve
even know how to
steepener.
the
Yeah.
yeah, like I don't even know what that means,
Yeah.
speak to me like I'm two. But now it's buy gold and watch the gold miners. That is the macro trade. So I'm just kind of curious from your standpoint, just hearing what I said. Has precious metals hit the mainstream, or are we still just kind of, is it still kind of early days for the generalists to come in and start thinking about hard assets like that?
Gold, has always been mainstream, I think, in the sense but it's waxed and waned in popularity, and it's really been out of favor for quite a long time. And I think that, like you said, the crypto industry did an amazing job at communicating the issues with fiat currency. And I think they did the job for gold. And now they are struggling that asset class is struggling to decide what it is, because of the volatility surrounding it and the correlations that have evolved within that market. And I don't know that it's sort of lacking catalyst at this time, as you've kind of gone through, you know uh, Donald Trump announcing that there's a strategic reserve, and every ETF in the world coming online with Bitcoin. And you think you get some down pressure in that price, and people are dropping off. But yeah, so I think that people are definitely coming back around to gold in a more wholesome and with I guess new eyes on the sector. And one of the biggest advocates of it is actually the crypto people themselves. So, I mean, the largest and probably most profitable crypto operation in the world is Tether.
Yeah.
And, Tether runs the US stablecoin, and they have, I don't know the exact quote, but it's like 180 billion in US treasuries that back their stablecoin. And what are they doing with the majority of the interest that comes off that stablecoin? Is they're buying gold, and I wouldn't. I think that they see their gold stablecoin is possibly becoming as relevant as their US dollar stablecoin going forward. And so, you know, the biggest crypto guys in the world are going into it. We've seen them in our sector too. We see them buying the gold miners. We see them getting very strategically involved in the early stage royalty companies. So, yeah, I do think it's more mainstream, but I also don't think that any significant amount of global capital's investor base has shifted into gold yet.
Right.
So I think there's room to run. I mean, there's always the crazy figures that like, oh, if 5% of global capital went into gold, the gold price would be X, so I don't think we have a huge adoption within portfolios. And I mean, portfolio managers, I don't, it's it's a slow adoption, and so
Yeah.
I do think that we're in early innings in that. And I just think it's almost, it's such an easy thesis that it's almost like too easy for the macro guys. Maybe sometimes they like stuff that's more complicated, but debt forces central banks to devalue fiat currency. That's the story. And like,
Yeah.
yeah. So yeah, that's kind of my view on that.
All right. So we've had a tremendous run in gold heading into 2026, gold and silver, I might say. And then, we went into the Vancouver Resource Investment Conference and Roundup, and it was jubilant, I could say. And then
Yeah.
got into the Black Friday volatility when, silver was hit for 30% in a day. Gold was down. I can't remember what's over 12%. I can't remember. I'd have to go back and look on the day,
Yeah.
but it was ugly. It was an ugly day.
After the new
Um,
Fed chair. Yeah.
yeah. Well, there's a number of things besides
Yeah.
Warsh being nominated that you can kind
Yeah.
of point your finger at. I think we've done a pretty good job of kind of delineating a lot of the headlines that caused that volatility. But it quickly shook sentiment out. Like it was out the window in a heartbeat. And
Yeah.
even with gold and silver now making a new trend higher, the chart looks good and constructive in both metals. We're still not peak jubilant, right? We're not in complete greed mode anymore. But you do say that the institutional people down in BMO, like you, sentiment's pretty good right now. So I'm just trying to balance this. I mean, are we kind of equilibrium? Would you just kind of given your sentiment test, are we at equilibrium now where we can have root and run? Or is anybody talking about taking profits and taking some risk off yet, or we got room to go?
Yeah, from speaking with corporates that have been in this industry, they're so gun shy, right? Because a lot of them have been in the industry for the last like 12 years that, a lot of them think, oh my God, these stock prices are crazy, but they've gone up so much. But when you start pricing, running DCF models and cash flow models at spot pricing, they're not that expensive. Like they're not pricing in spot price by any means, right? And so
Mm-hmm.
I think that the corporates are still on this conservative stance, and that's a good thing, right? You don't see you know terrible acquisitions being done, and you know huge capex budgets so far, and so there's a lot of discipline within the market, which is healthy for the sector, but there is a building of new projects that are coming along, and capital that wants to be deployed, that's looking for a spot. And so I think that we will see you know projects come online that are not top quality projects, and we'll see some turbulence in the sector from just the reaction to more capital being there than the sector can absorb.
Yeah, yeah. So, but what about portfolio managers such as yourself, Jamie? Like, what numbers are you putting into your cash flow models? Are you using
Yeah,
spot?
it's we certainly look at it in spot,
Yeah.
and that's I'm bullish on gold long term, and we are looking to provide our investors with exposure to gold in the best risk adjusted possible way. And yeah, and we're really looking for a lot of the hidden value in companies. And I think right now there's a lot of like non-cash flowing companies, I think are trading at discounts to the cash flowing companies. And I think that there's some companies that don't have strong institutional backing, or just not gotten on the radar, that
Mm-hmm.
provide an interesting opportunity to enter into the stock. And there's a lot of companies out there that have you know growth trajectories where you need to do the work to see it. And when you do the work, you look several years out, and there's significant cash flows. I mean, there's some of these companies that like a couple years out are trading at like 25% free cash flow yields. So yeah, and I think that you know, a lot of these companies too, certainly the stock prices would not react well, but on a longer term basis, I still think that they would create significant value within the stock price. Is even if the gold price went down to 3,500, the cash flow out of these things is fantastic. And then you think
Right.
about the 80 million ounces that's mined a year, and the amount of cash that's going to be generated from that at $5,000 gold. That cash has to go somewhere, and and a lot of it is going to go back into the industry. And so figuring out where that cash is going to be deployed and getting in front of that wave, I think, is an interesting strategy as well. I mean, currently we've seen companies, they're definitely increasing dividends, which I think investors like, and we're seeing share buybacks increase. And but the floodgates have not been released on M&A and massive projects.
Is that from lessons from back the last cycle? So many mistakes were made, and people remember vividly. That's why a lot of people never
Yeah,
came back in the
no,
sector.
definitely. Yeah, no, I think it is. It's like, I think people remember, the Redback mining acquisition at the top of the market, and like, what else? The however many $1 billion that Barrick spent on Pascalama, like those are still stories within the market, that people remember and are looking to avoid. Um,
Hmm.
so that's positive. That we want our companies, putting, you know, capital to work at, high rates of return on a risk adjusted basis.
So the producers are, and you're absolutely right. The producers are doing a good job of capital allocation with the stock buybacks, spending down their debt and taking care of the books. Nobody's out there making huge acquisitions. I want to table the conversation and talk to you about the royalty companies and the streamers. There's been a few big deals on the streaming
Yeah.
side, especially on silver. But before, so let's table that and let's get to it. But I do want to ask you, so if there is M&A, what is kind of the checkbox? Would companies, producers need to see for potential M&A from earlier stage companies, the developers? Do they basically need every single risk checkbox off the books in order for them to come in and make an acquisition and make an offer, or would they go and take a little bit more risk, further down the food chain?
Actually, to flip that around a little bit, I think that there's still a lot of opportunity in M&A from divestment from the large companies. So if
Mm,
you look at what's going on with Barrick right now, Barrick's kind of a sitting duck. And, should something happen between Barrick and Newmont, there's going to be further divestments of assets. Like I wouldn't be surprised if like all of Africa is split off again. And so that's interesting. And then the other one within the industry is like Rio Tinto and Glencore. That those discussions fell apart. um,
right.
I know Rio or Glencore has been a dancing partner with many companies. I wouldn't be surprised if they do find a partner. Maybe they go back to Rio, but the amount of assets within the portfolio of like a Rio Tinto and a Glencore that are just completely non-core, that would be great assets for the likes of a $2 billion mining company are enormous. And the amount of value that could be created out of that is huge. And we've seen that companies are becoming more wise to that potential. And that you've seen that with Newmont with like, they did it with Orla. They took stock in Orla. They made a huge amount of money in Orla and they sold out. Agnico actually did the same thing. And then you've seen they did it with Forte, right? Like where they took stock in
Hmm.
Forte and they've made a lot of money in that. And so I think that that is actually an interesting recipe because they're within the mining sector. The one thing that's much different than other sectors is there's really a diseconomies of scale when you get beyond a certain number of assets and you lose attention of some of those non-core assets, and your best people aren't working on them. They're not getting corporate focus. They're not getting the right capital going to the assets, and you put them in the hands of a tenacious entrepreneurial group, and there's a lot of value to be daylighted. I think Himlo will be an example of that. Discovery Silver is an example of that. So I think that there's a lot more of that to come um, on the acquisition side. And then flipping back to your question of, yeah, of projects that, the what you need to see. I mean, I think that there are projects in the market, they've certainly gone up in value, but that provide a great opportunity for producers. They have, you know, whatever 3 million to 5 million ounces. They're going to produce gold at you know anywhere from $1,500 to $2,000 an ounce. They're in good jurisdictions. You're looking for none of these major flaws have been de-risked, from whether it's metallurgy or permitting, or water. Yeah, I think that, and I think you've seen a lot of the companies take footholds in such companies, and that will continue to happen. So
Yeah.
have I
The,
answered that thoroughly enough?
yeah, no,
Yeah,
it's very thorough.
yeah,
Well, I promised that
yeah,
we were going to talk about a couple of the latest silver deals. I mean, we're always trying to figure out, okay, where's the next creative deal going to come from? And the Wheaton Precious Metals silver stream on the Antamina project with BHP, I think, was it. It came huge price tag,
yeah.
$4.5 billion, I think.
Yeah, I can't remember. Oh my God, I was reading one of Joe Mazundar's reports. He had done something on there, and he was
Yeah,
quoting like what they had spent on the first one. I can't remember what it was, because they bought a stream on it back in like 2013 or something. Or
yeah. Oh, upfront payment of 4.3 billion. I got the news release up here from Wheaton,
yeah,
which I found actually really. I mean, just to put it into perspective, where we're at in this cycle, Wheaton does this huge stream on silver, just silver, for a massive copper project in Antamina, where Philo was sold 2 years ago for about the same price. Canadian, 4.5 Canadian, 4.5 billion Canadian.
yeah,
That's just kind of where we're at, and how
yeah,
fast things have gone.
yeah. I
But I
mean, you
think
also had the deal with Lunar and Lundin Gold, where they did the
that
deal and both stocks went up 15%.
yeah, I know, and
Yeah.
that's exactly, and so I'm just kind of wondering if this Wheaton deal, along with the Lunar deal, maybe has opened up the gates a little bit for creativity for the streamers and the royalty companies to say, okay, not only do we have to we're probably gonna have to pay a bigger premium for some of these deals to get them through, but that just means it's a call option because we think precious metals are going to continue to have a big run. So, they still continue to look cheap. I mean, just kind of your general thoughts on these deals, and if it really is, if this will be a moment in time where, like, oh, remember that $4.3 billion deal Wheaton did? Remember how cheap it was? Like, will we ever say that?
Yeah. I mean, the royalty companies, though, they have this alchemy of being able to create value because they trade at like a premium to NAV. And the reason they've traded at a premium to NAV is, the likes of Franco and whatnot have essentially provided that value over time through optionality in the drill bit, and not being subject to cost. But they're able to create so much value because, I mean, they're buying cash flows. Even if they buy them, more expensive than NAV, the multiple re-rate within the stock is accretive. And then the flip side of it, it allows a base metal producer to essentially tranche their cash flows like you would in a, whatever, like the bundling of a mortgage-backed security, where you take essentially your least risky cash flows. You're selling, you're pulling that out of the bundle and selling it for its maximum value, where within the company, within the larger mining company, it doesn't get that value. So it's really a way of daylighting value for the multi-metal producer. So it's, yeah, and they certainly paid a healthy price. But yeah. And then the Lunar deal was, I mean, it was interesting because, the Lundins have done such an amazing job of building a reputation within the sector and executing on projects and gaining the trust of their investor base, because they've done a great job. And not only that, their capital is sitting alongside other investors. And so when they spun out that royalty company, it automatically traded at a very healthy valuation. So
Mm-hmm.
it allowed them to, uh, you know, create financial alchemy, as Pierre Lassonde stated yesterday in a talk with the Lundins. And that's, you know, you pull an asset out of one asset and put it into another asset, and both assets go up by 15%. And again, I think that is the whole idea of, of the tranching of different cash flows and pulling out, separating cash flows that have more value from one asset and putting them in in another asset where that value is daylighted.
Yeah, no, absolutely.
So yeah,
I kind of had a follow-up question after the lunar news. That was $670 million silver stream from the Fruta del Norte project with Lundin Gold.
yeah.
And obviously half a degree separated from both those companies. But so my question is like, would a Royal Gold or a Wheaton have done a similar deal for the Fruta del Norte silver stream, or was it always going to be, lunar?
Yeah, I mean, I don't know how they dealt with that from a board perspective, and people recusing themselves, and how that was dealt with. And I actually haven't like sat down and looked at the numbers of those deals. I mean, I've been in nonstop meetings, kind of losing my voice for the last like 3 days. But yeah, it's yeah, I mean, I'm sure they must have run a process of some sort, right? I mean, it's kind of their fiduciary duty as
Mm-hmm.
shareholders, you know, to make sure that both companies are receiving, both boards agree on the pricing of it. Yeah, and but I met with Adam not that long ago, but I said that you're kind of in the catbird seat with a royalty company that's small, that trades at a premium, because it's actually really attractive to have him take you out, because you can really feel the re-rate in the stock, right?
Right.
Where if if you're a smaller royalty company and you get taken out by a Royal Gold, you just get the uplift that day on the shares, like the 20%. But with you know with a lunar or something, there's you can get the full re-rate within the stock. So
Mm-hmm.
yeah, there is an attractive nature to that.
Yeah, I think Adam being the CEO of Lunar is probably, uh, and I mean this like the easiest job he probably has, because he's basically just CEO of a royalty company and doesn't have to deal with geopolitics and all that multifaceted, programs of all angles coming at him. It's like at the end of the day, it's like, oh, I could just crunch numbers here and be a royalty company. It
Yeah,
seems like a
yeah.
pretty good deal for
Well,
him.
I think also is it's like it was kind of like they have all these great huge assets, and why why would you leave that value accretion to happen, to give it to Royal Gold or Franco Nevada or Wheaton Precious, when there's a mechanism for you actually to capture the value yourself?
100%.
So that's exactly
Yep.
what they did.
Yeah. Yeah. Yeah.
Yeah.
Back in the day, I was digging through your old LinkedIn profile. I didn't know this. You actually interned for Royal Gold
I did.
back
Yeah,
in the
yeah, yeah.
day.
Yeah,
Oh, very
yeah, yeah, yeah.
cool.
So it was yeah, it was when they were doing they had just done the Mount Milligan acquisition. And then it was also working on it was actually before Mount Milligan, and then they were doing they had done IRC, and it was like integrating all the IRC assets into the original Royal Gold asset. So that was Doug Silver's company that they took over.
Yep.
Yeah, and it was great. I mean, the royalty company is such a, there's always the joke that, that, oh, you guys just sit around and collect checks. Well, from having been inside a real mining company and a royalty company, there is some truth to that.
Yeah. Right.
It's
Right. Right.
yeah,
Right. Right.
but it's it's a great business, right? They are, right. Again, it's sometimes the simplest businesses are the best businesses.
Yeah. Yeah. Yeah.
Yeah,
And I will say, because Royal Gold based in Denver, Orion still has offices in Denver. I still see Doug around. I mean, some of the most top notch people, smartest people I've ever met in this industry, but also like they're a tough nut to break. They will give you nothing. You can ask them a question like, "Hey, where you,
yeah, yeah, yeah,
like
yeah,
what are you working on?" It's like
yeah.
nothing. Like they will not say anything.
Yeah. No, and
And
they do. It is, and they do have an interesting perspective on the market too, because like a portfolio manager or a private equity guy, they really see a lot of different deals and have looked under the hood of a lot of different companies. And
Mhm.
so it's yeah, they have good perspective on the sector for sure.
Yeah, yeah, absolutely. Well, it just shows you like how w- just how evolved the royalty and streaming sector has become for the last 15 years, right? But it
Yeah,
was almost like they were forced to it because royalty companies went from few and far between to like a lot of them. There were a lot of royalty companies because there was a lot of projects. And then, good projects and exploration development companies spun out their own royalty companies. So that exacerbated the number of companies. And so you're starting to see premiums go up, costs were going up. And companies were forced to get really creative in how they continue to acquire assets and build portfolios. Because if there's one thing, like any business, there's got to be scalability. Like scalability never ends, even if you're a royalty company. You can't just depend
yeah.
on the metals prices to continue to provide the scale. You have to acquire new projects. So,
Well, the
I mean, it's
scalability really matters in the royalty sector because it's like I was saying, the only person that I've seen that started a royalty company that's tiny that trades at a good valuation was Adam Lundin, but it's because he's a
Mhm.
Lundin, right? I mean, it's the other guys, they cobble things together while they're trading at 0.5 times NAV, and it's hard to do things that are accretive. But once are a Franco Nevada and you trade at like 2 times NAV, anything you do is accretive. And so your cost of capital is so cheap that it's like it's very easy to do larger deals and add value to your pipeline. I think that's a difference.
yeah. We're seeing some nice moves in developers, smaller producers,
Yeah,
developers, and even explorers right now. Jamie, let try to pivot into this part of the
yeah,
the earlier stage companies and the conversation. There's a drive for exploration now. It wasn't too long
yeah,
ago. Good drill results were actually getting punished because it was a liquidity event. That was 3 years ago. I remember it vividly.
yeah,
That didn't make any sense. But now, I mean, we're seeing really good drill results come in double-digit gains on equities. So people are really starting to pay attention here. But what does the market really like? What's got the market's attention? If we talk about developers, explorers, what's getting the market's attention the most right now?
Oh, what is getting the market's attention the most? That's a tough question. Yeah, I think new discoveries are, I mean, always garner attention, right? And so, I think within the copper side, there's still, after the success of a lot of the, the names that we've seen in South America, specifically the Lundin names, and then also like ATEX, that any of these long copper porphyry hits where you can build tons quickly, are very, very attractive to people because you can just put so many runs on the board quickly where it's different than a narrow vein deposit. But any of the high grade stuff, like, I saw West Point Gold's results this morning. Like those are amazing. Like those are, I didn't even see how the stock reacted. I'm sure it was good. Right. But,
Yeah.
yeah, but, yeah, no, yeah, I think I don't think that anything different than any other market where, great gram interval, gram meter interval results are going to drive share prices.
Yeah.
So,
Yeah.
I'm thinking, just before we close out the royalty company, the one thing, and I don't know if you've talked about this on your show, which is interesting. Have you talked about the the infiltration of Tether into the early stage royalty companies?
Yeah, well, so
Yeah.
Elemental is a sponsor of the podcast, so we
Okay.
work with them, you know, quite frequently. We've had done other conversations. We've asked David Garofalo of Gold Royalty about Tether coming in, buying on the
Yeah.
market as a meaningful investor. Then there was another company. Was it Metalla? Are they
Metallo. Yeah. Yeah. Yeah.
Metalla? Yeah,
Yeah.
yeah. And there may be more. I just haven't picked up on lately. But it's they're eager. They are super eager.
Yeah.
And so
Yeah.
what eager to do what I think is yet to be seen, but they are
Well, I
moving
think that
quickly.
I mean, I think the perception is that, a lot of the smaller royalty companies are viewing them as somewhat of an activist and, are, the, I think, I don't know specifically what the goal is, but it appears to be to roll up all the smaller royalty companies. Um, so that's I was just thinking of interesting stuff that's going on in the market. I mean, that's one that stands out. And
Yeah.
I think that what they do see is that they see the multiple that comes with scale. So as you put however many of these companies together, that you can get that multiple. You start trading in larger index. You become more of an institutional type of investment, and you're kind of off to the races. And then I think it dovetails with their idea of doing maybe it's they pay out their gold coin as the dividend or something. Yeah. Anyway, so I thought I'd bring that up.
All right. I'll apologize. A little bit of technical difficulties with our connection, but I'll
Yeah.
quickly wrap it up here, Jamie. Say whatever happens with Tether's involvement in this sector is yet to be seen. I think there's a lot of speculation of what's going to happen, but we're going to be here reporting whatever that news is, and we're going to be paying attention. It's pretty interesting. The Elemental royalty dividend policy included their XAU token.
Yeah. Yeah.
Because
Yeah.
that,
Yeah.
so we're
Yeah.
gonna, I'm gonna put the carrot out there. We're actually scheduled to get an update with Elemental down the road here, and that's obviously going to be a
You
big
should get
question.
Juan, what's Juan's last name? I'm blanking on his last name, but he's the guy that is doing a
Yeah,
lot of the investments. Get him on the channel.
we're working on it. And
Yeah.
Juan's probably listening, and let's say, Juan,
Yeah.
come on, buddy. It's an
Yeah.
open invitation. Okay, one of the big themes, obviously, for the last couple of years, it wasn't just the Trump administration, also Biden administration, is really government's involvement in critical minerals. We're
Yeah.
seeing more and more headlines. We've seen government support, government money coming into projects. We've seen Project Vault kind of
Yep.
get launched and try to really get a handle, a grasp of stockpiling some of these minerals. I'm yet to see anything meaningfully on like the processing and refining side of things,
Yeah.
Jamie. I think that's a missing link in the chain here.
Well,
But
U.S. Antimony has gotten funding.
one,
Yeah.
one,
One. Did MP Materials get funding for their thing in Texas? Their plant in Texas?
I think there was some money involved in that, but it's
Yeah.
it's not operational, right? As you
Yeah,
and I are
no.
talking,
Yeah.
and there's
Yeah,
stuff
no.
happening in Utah with energy fuels, which is good to see. But I mean, like you can't just turn these things on. You can't just build them tomorrow, right?
No, not at all. And also the expertise behind doing that are certainly diminished within the US, right? We haven't done it in a long time. So we need to build back up those expertise. And, there's probably going to be some growing pains with that, but we need to do it because it's effectively the majority, what are like 70% of refining capacity of everything sits within, China on the metal side. So
Right.
yeah, that's another point that came up and that we were going to talk about is, the government's presence at this conference. We've never seen the government here before, but they had a full panel at the conference, and they were all very constructive about supporting the industry. They all were super passionate about having entrepreneurs and companies come to them and present them with ideas and look to get funding because they have money to deploy and they have a mandate to do it and they're open for business is effectively what they said. I mean, John Gallagher, who was the Department of War, I think he's deputy to the chief of staff, came and his quote was that we're taking a wartime footing on this initiative. So
Mm.
I think, and I think he's right. I think it is something that the Western world needs to get our hands on and really go full bore in developing the expertise and the capacity to make this happen. And they seem to be doing it, but there is a bureaucracy with it because I did speak with some of the companies who have received funding and a contract signed to get the money, and it's taken months and months and months to actually get the money.
Yeah.
That's, I guess that's the nature of government.
Yeah, yeah. But
Yeah.
I mean, I don't think this is just partisan. I don't think this is just
Oh,
going to be
no,
a
no.
Trump.
Yeah, I totally agree with you. Like, and I don't think it's something that you have to worry about that, like, if the pendulum swings back the other way and we end up with a, Democratic leaning government, that this is an initiative that will just be thrown out. I don't think that at
Yeah.
all, right? Like, I think it's one area that both sides really do agree on. So that's, I think that should um, give some confidence to the mining companies and investors in the sector that they will see the government support will be there for a long time. And, speaking to them in private as well, that, it, they stated that, this is something that's going to go on for the rest of our lifetime,
Wow.
because it's going to take that long to reinvigorate the sector and create those supply chains that will allow us, to not be so reliant on one country.
Yeah. I was reading Daniel Jurgen's book, The Prize. So I am reading it,
Yeah,
and he was talking about leading up to World War II and the attack of Pearl Harbor. And one of the as the Japanese saw Pearl Harbor as a success, with
yeah,
the exception that they did not blow up and dismantle the thousands and thousands of barrels that were at surface at Pearl Harbor of oil. And if they would have shot those things, it would have blown up, and the U.S. Navy would have been 2 years behind
yeah.
because of that. And so it just kind of makes me think it's like, they're taking this approach now, critical minerals as a wartime, you know, type of activity. But for God's sakes, let's hope nothing happens to where we would need those now, because we would be
Oh, totally. Yeah, we
so
would.
far behind.
Yeah, yeah, exactly. I mean, we saw that with the initial invasion of Ukraine when we were supplying the Ukrainians with uh, I forget what shell it was, but uh, the mortars or whatever they were,
Yeah.
where, essentially we ran out of them, and it took us like, 2 years to rebuild our stockpiles of them. I think it also is, there's a story about that in World War II that, do you know that guy, Craig Tyndall? Have you seen him? Like
Yeah. Yeah. He's
also,
been on the pod. He was on the pod a couple
yeah,
weeks ago.
yeah, he's great. Like, he's really put together the thematic of, the critical minerals and the reliance, on, you know, really China and, how structurally, I guess, deficient the Western world is. But he talks about that. I don't know if he brought it up, the fact that Broken Hill Mine was owned by the English and was a supply of zinc during, I think it was World War I. And the
Mm-hmm.
only refinery that was the only refining capabilities were in Germany, and so, they ran into this where they couldn't produce shells and, so they had to quickly get on that. But that was one commodity, right?
Right.
We're talking about every commodity.
Right.
So we have a tough road to hoe here, but, the government's behind it. And I think it will be certainly a tailwind for the sector. And anytime you get, cheaper capital and grants, that certainly lowers your cost of equity. And it leads to better equity returns, which incentivizes more people to get in the industry,
Yeah.
so
Yeah.
it's, they're trying to do the right stuff, but it's a, it's an aircraft carrier here. It's slow to turn. And,
Yeah.
it's not like, building software, which happens overnight. Mine's, take 12 years to go into production or whatever it is. So, yeah,
That's right.
yeah,
Very good. All right, Jamie, let's leave it at that. Great conversation. We took up as much of the hour as we can, despite the technical difficulties.
yeah.
How do people, if they got to follow up with you, have any questions or want to follow any of your stuff? Like, what's the best way to get a hold of you?
That's a good question. I normally try to not get a hold
I mean,
of.
I'm pretty fortunate. Like, I get to see you from time to time, but
Yeah. Yeah, no, they can reach out to me on LinkedIn. Probably is maybe the easiest way. Yeah, but I don't, just due to, running a public fund, I don't do much public outreach just because from a compliance perspective, it's always difficult and it's just easier not to do anything.
Right.
Because everything is, the SEC is, you got to watch your P's and Q's with all that. So,
that just makes me even that much more grateful that you shared some of your time here with us today on MSD. So thanks so much.
Yeah.
We'll see you around. Safe travels up to Toronto, and we'll talk to you
Great.
again soon.
Thank you so much, Trevor. Always good to see you. Have a good one.